What's up, everyone? All right, so we're going to go over trades from today. GFAI was the only stock I traded today, and I actually didn't think I was going to take any trades today because coming into the open, CELZ was our leading gapper, leading gainer, and I know that stocks under $2 are not where I make money. In fact, even yesterday, I can't remember what stock it was now. I've already forgotten. Lucy is not under $2, but it was on the cheaper side, and I churned a lot of commissions on it. So, NASDAQ made money because I do the direct routing. My broker made some money, and I didn't make a whole lot. And I don't really like that feeling. I'm just sitting here working for them when I trade stocks like that. Now you could say, well, geez, these are days that you should be trading in the free commission broker, TD Ameritrade, or, whatever, E-Trade, something like that. And that may be true, but in any case, I think one of the other problems with these, and CELZ was the case as well, is that I like to do breakout trades. I like to buy dips. And when you have a lower price stock, we often see more of the grinding action. And I kind of struggle with that because the breakouts don't really give you these exhaustion kind of squeezes. The dips don't really bounce up that much. You just have a compressed range. And I find that I end up churning a lot of shares, getting in, getting out, and then with my luck, I do catch the one gross flush, but I'm in it, so I end up losing on it. Anyway, CELZ made a nice move this morning from 50 cents all the way up to $1.37, and I didn't trade it. I sat on the sidelines. I watched it. I watched it right here at $1.07, and I thought, yeah, if it breaks $1.07. And it did. It goes to $1.09, then it flushes back to 98 cents. Then it comes back and rips back up to $1.12. Then it drops again, back down to $1. Then it pulls away here to $1.18, and it squeezes up to 38, but then, flushes again. Anyways, I steered clear of it, but it was obviously the leading gapper. It was the stock everyone was talking about. It was up 160%, and I said I'm not going to trade it. So the problem here is that there was an obvious stock today. It just happened to be one that I didn't like. So that can be tough. Now, the second or third leading gapper, maybe I like them more and they're better for me, just for instance, but if they're not obvious, well, we may not get good follow through and we may not see clean action, and then I may be disappointed when I'm aggressively trading them and, it doesn't work out. So I have to be cognizant of whether or not the stock that is most obvious today, is the stock that I'm trading. So anyways, CELZ, no trades on that. And then at the open, I'm just sitting here, kind of content thinking I might not get any trades at all. I'm looking at some other stuff, and I've got a class that I'm going to teach today at noontime on YouTube. So I was like thinking about that and looking at my slides for it. Anyways, just kind of sitting here, actively watching, but really just listening to scans. And that's when right there at 9:32, GFAI hit my scanner at $18.30. So I heard the scanner alert, ding. I look over, oh, GFAI. And of course, to just kind of like slow down, or what we're going to do, I'll give you the anatomy of these sort of 2 minutes. Actually, I'm going to give you 2 seconds in 2 minutes. So I'm going to slow it down. So ding, look over. First thing I look at is the symbol. I don't need to look at the time. That doesn't mean anything to me. I know what time it is. I look at the symbol, GFAI. Immediately, I'm having a flood of memories of GFAI. Yes, traded this the other day. Traded it a couple times this week. Traded it last week. It's a former Momo stock. Then I look at $18.25, the price. Okay, that means it's coming up near the high of the other day. And I don't need to look at anything more. I see those two things, and I type in the symbol. Now, I could just click on it and it'll update, but I just am used to typing it. So anyways, I type it there. I see the chart. It's popping up. It's pulling away. I'm looking at the daily chart, and I recognize you've got this daily trigger at 1886. At that point, I then type in my level 2 window, GFAI, and boom, I am pressing the buy button. So I started with hotkey. I didn't even have time to press the buy button. I pressed the hotkey shift 2 to buy 2,000 shares. Added 2. Added another 2. Added another 2. 6,000 shares. Then it starts squeezing up. I add another 2,000 shares. Sorry, no, I added 1,000 shares at 1875, 1880, and for the break of 1897. We then squeeze up to $19.50. Then we go up to 2025. It pulls back right here, and by this point, I'd already made $4,000. Then I'm buying this dip here, and we get this squeeze up to 2170. By that point, I was up about 8,000. It drops down here. I buy this dip, but I got out at like 2125. I thought maybe it needed more time to recharge, and I'm not even in it right now. As much as I like this, in some ways, what I don't like are the 3 topping tail candles right here that marked out the high. So we've got a descending resistance line right there. You see we're hitting. I hope it goes higher. I hope it squeezes. But unfortunately, and I'll show you the spreads on this. So you've got a stack of sellers right now at 50, 48. So there's back up to the high. Wow, look at that. Amazing. But look at how fast that just hit a high of 25.94 and is back at 25 on the bid. Right? So this time it broke it. And that's an awesome trade. It broke the descending resistance line right there. 24.38, 25, 24.50. Just boom. Amazing. So it's got more in it. I left some money on the table today. But, that's part of trading. And so this is one of the challenges that a lot of traders face is knowing when to walk away. I hit a high of $10,000 of profit. And I gave back $1,500 because I'm up I'm up $8,500. So giving back $1,500 for me, that was on this second attempt right here. I got in for this and it flushed down. So I gave back a little profit. And I thought, you know what? It's better to walk away with money in my pocket than to keep trading, because if I keep trading and I keep losing, I'm going to get myself frustrated. Now, of course, if I keep trading and I keep making money, I won't be frustrated. But you have to think about downside risk first. You love seeing this, but it could have done another one of these. It could have popped to 24.60 and then flushed to 23 because we've seen some dramatic moves. So in any case, so I'm sure some traders caught that move. It's obviously got some momentum here. Now it's at 58%, 26.44. But this is the area where if you missed that big squeeze right there, which on the 10-second chart is a topping tail, then you say, well, geez, do I get in here for the break of 26? Am I chasing it? Is this just too risky? And that's actually what happened to me right here. I missed that big candle, but then I got in on this little pullback. But it really was like, I missed the bulk of that move. Yeah, I got a little piece of it here, and that's what I guess put me up to 10,000 from 8,000 to 10 or whatever. But I missed this big candle. And right here, I missed this big candle. And then look at that drop, right? So now, 25.50, you got a 28-cent spread, and it starts to shake out some people that bought a little too high. The bottom of that candle there was 26.15. So one of the things that we deal with these stocks in this price range can be bigger spreads. And, when it's going strong, I guess that can work to your advantage, because next thing you know, you get these candles like this one right here where it jumps up $1 a share. But you can also get it going the other way where it flushes $1 a share. This candle right here has a $1 range. And when you catch it the wrong way and you're having to just bail out at the bottom, I mean, you never want to do that, but sometimes it does. You're hitting your max loss. That's when you get really frustrated. So anyways, my process on this was saw the stock hit the scanner, was familiar with the name, jumped in it very quickly, rode the momentum, and made some good money in the beginning of the move. It went higher than I thought. This peak right here, the way we had this topping tail at 2170, that kind of made me a little bit unsure. I was like, I don't know, 2570, 2170, it kind of topped out there, came all the way back down to VWAP. And you know what I thought was forming here? A head and shoulders pattern. I actually recall another instance not that long ago where I saw something like this, what I thought was a head and shoulders pattern, and then it broke to the upside. So, that's not typically what you expect. And maybe that's why it broke so strongly, is it caught some short sellers off guard. And then all of a sudden you got that one candle right there where even on lighter volume, it just rips. I mean, that was impressive. And I was really kind of bummed out that I missed it, because I was trading it and then I got out. You see this candle hits 2114 and then it dips down here for a second to 2180. And I had just gotten in a little too high at like 21, made like 10 cents a share, 5 cents a share. It dips down and then boom, really opens up. So yeah, these can be tricky. It can be really hard to know whether or not you should keep pushing it or you should just be grateful and walk away. I think you have to have a rule of thumb that you're going to follow consistently, because if you're inconsistent with how you follow those rules, you're going to have inconsistent results. So one of the things that I always try to remind people is that it always feels better, in my experience, to walk away with profit in my pocket. And yeah, I'll feel a little bummed out when I leave money on the table like I did today, but I feel so much worse when I give back half my day. And I could do that easily. On a stock like this with 2,000 shares, I catch a 1 point flush. All of a sudden, I'm going to go from up 8,500 to up 6,500. And that's only with 2,000 shares, right? Like one of those moves. And I'm telling you right now, I am sure there's someone out there that's going to say, holy cow, I just gave back my whole morning. You know that happens. And you've seen it happen to other people. You've maybe had it happen to yourself a couple times. That's a 2.5 point drop with 4,000 shares in 30 seconds right there. These are 10-second candles. In 30 seconds, I could have just gone from up 8,500 to up 2,200, given back my entire day. So you got to be grateful for what you've got. When you consistently look back and you realize you're leaving money on the table on a regular basis, then that's definitely a time to consider pushing it a little harder. But this year for me has been tricky. This year I've had a lot of days where I have overstayed my welcome and given back profit. I've had a lot of days where I've just churned commissions, pushing it too hard when the market wasn't really hot. And so now I'm in a position where I don't feel like I can really take a lot of risk. Right now, I'm kind of like, listen, I've lost a little bit of ground. I just need to keep my head down and, set my pace and just sort of chip away. I can't afford to swing big. I just don't feel like I can. And so the result is that hopefully I will be a bit more consistent, but I may be leaving some money on the table. Now, once I get myself in a place where after a period of some success and consistency with, keeping my head down, pacing myself and hitting base hits, maybe I'll be able to feel like I have a cushion to step up to the plate a little more. But you know what? I did step up to the plate today and I gave back 15% off the top. So that for me, that could be a reminder to hold patience a little longer so you don't blow yourself out too soon. I knocked myself out of the game today. Granted, I'm at 8,500, but still I knocked myself out of the game because I gave back a little bit, just enough off the top that I was feeling frustrated. And I think that's also around the psychology of hitting 10,000 and then going back to, not just 9, but into the 8s. That's kind of like a little bit of a psychological number when you fight against that. It'd be like going from up 5,000 to up 3,800. It's like, man, I was at 5 and now I'm not just at 4. So that carries a little bit into watching your P&L, but you do have to be mindful of your P&L and aware of where you sit on the day. And anyways, so that's where I'm at. It's a green day. It recovers the loss from Monday, which was on ONCS, which was kind of just aggressively trading a stock that didn't fit within my wheelhouse. So I'm glad to fully recoup that loss now. So I'm back at the high of April, the high of all time in terms of my trading profits, and I'm going to live to trade another day. I just saw right now a 70-cent spread. It was 27 on the ask and 26.30 on the bid. That's a tough spread. 70 cents. Now it's 20. It's tightening, but to the downside. Pressure at 26.30. You could see how, see there's that seller up there at 27 that just popped up. This is a difficult place to be a buyer, no doubt. It's got some headwind, but anyways, good job for those that traded this today and did well. If you did well, those that came out on the wrong side, study the chart, look back at where you got in, ask yourself what you were doing wrong. Were you chasing it? Were you selling too soon? Were you buying into too much weakness? Where'd you go wrong? And what can you do better next time? And today's just one day, and we'll have many more days like this, of course, this year, where we see something that's strong and we're able to jump in and get aggressive on it. So maybe on the next one, I'll be able to do even a little bit better than I did today. But I'm grateful for my gains, and I'll be back at it tomorrow. And a reminder, as always, that trading is risky. My results aren't typical, so make sure you manage your risk and trade cautiously. Practice in a simulator before you put real money on the line, because there's no guarantee that you'll find success as a trader. Whether you trade on your own, you'll learn from me. And if you want to check out my class from today, 12 p.m., I'll be teaching a class on the Holy Grail technical indicator. That sounds interesting. So if you are watching this, hopefully you maybe already watched that class, but if not, I'll put a link so you can check it out here.